Welcome, Amit.
Thank you.
So we have the Keynote 2021 Tech Impact ESG SDC Investing for the GCC MENA African Opportunities. The keynote speaker, Amit Grover, founder, managing partner, Grover & Company, England Limited. Grover & Company is building 50 million early stage venture capital fund. It operates in New Zealand, Australia, UAE, and United Kingdom. Their impact ventures is keen to invest and partner with the following plant-based food technology ventures. They are alternative proteins, alternative dairy, cloud kitchens, vegan frozen ready meals, cellular agriculture, food manufacturing, processing, distribution. So over to you, Amit. Go ahead.
Thank you, Rajan, and welcome to all my fellow attendees from different parts of the world. Now, I'd like to talk today about impact investment and highlight my views on sustainable development goals, which are the United Nations Charter, as well as some of the areas of ESG. Now, I'm going to speak from a point of view of my own personal experience and less about the market research and trends that are published on a worldwide domain. So look, my experience with impact investing is both on the social side, the environmental side, and merged responsible or rather conscious capitalism side that promises a healthy return on investment or a healthy internal rate of return to limited partners and various investors that support our vision. Now, in terms of impact investments, it's very important to understand the areas that today are very dominant. Some of those areas are also becoming great opportunities that are highly attractive for family offices around the world. And I think, looking at the MENA region that I'm quite well and intrinsically aligned to, you have the likes of the education sector with EdTech leading the kind of interest levels. In terms of technology, there's a lot of talk about blockchain previously, and obviously that's got accelerated in the COVID-19 with a lot of emphasis on artificial intelligence on various sectors dominating the trend. Then, of course, you've got the Bitcoin that is of hugely important to a lot of tech investors or fintech investors that are trying to kind of get their hands into the technology pie. But beyond that, I think some of the obvious aspects that are jumping out in terms of attractiveness and interest for family offices when I speak to a bunch of them while I'm trying to raise my own fund, are areas of climate change. I mean, it's become hugely important, especially during the COVID era, that people live more responsibly and a focus on the environment that we live in. Then you've got the likes of healthcare, automation, and let's not forget the alternative food sector. The alternative food sector, both protein and dairy, has seen absolutely tremendous growth within the pandemic. Starting from March last year till now, I mean, some companies in the United States as well as Europe have literally shown 150% month-on-month growth in the sector. Consumers are getting more conscious about what they eat, what they put out there in the environment. And I think the pandemic has just accelerated that responsiveness, that responsibility towards the surrounding that we live in. But beyond that, I think where ESG and SDG really come in, and at least that's how I see it, is helps you measure some of the impact areas that you're trying to make. Now, SDGs are obviously very centric to the United Nations, the 17 of them. Some of the ones that kind of really jumps out are things like eliminating hunger, eliminating poverty, better healthcare, better education, gender equality and hygiene. I mean, for a start, the fund that I'm creating not only kind of focuses on the alternative food sector, which is all about plant-based and cell-based food products, but also kind of has key areas like gender equality, women empowerment, women entrepreneurship at the center stage of the impact that we are trying to create. Now, in terms of how the whole investing sector is looking like, I mean, as far as I'm concerned, it's taken leaps and bounds. I mean, I recently read a study that was published by Temasek, a sovereign wealth fund out of Singapore, that in 2019, I mean, you were looking at about $550 billion in the impact investing trend. Today, that's kind of almost reaching about 800 billion. Now, that's great news. Maybe not when you look at the total investments made in a year versus how much of that is impact, but surely around the world, when you speak to multiple family offices, hedge funds, institutional funds, sovereign wealth funds, ESG and SDGs are a huge focus area of investors in today's sense. Now, in terms of some of the SDGs that are really, really dominating the trend, at least what I'm noticing out there is definitely climate change. I think to a great extent, climate change is dominating some of the new technologies coming out, opportunities in area of clean tech, clean energy, obviously food security, which is a very interesting part of what we do as a fund, but in other areas. So I think that's where we see a lot of opportunity getting funneled, getting kind of pushed through, along with the other social aspects that we kind of talked about. Now, in terms of I could speak much at length on the subject that I am an expert on, which is basically, food security with a focus on alternative food. So we are kind of building a fund that aims to kind of work from New Zealand right up to the United States and all the countries in between, basically bootstrapping ventures that would predominantly achieve 3 sustainable development goals or ESG mandates. Number one, like I talked about, reducing greenhouse gas emissions. Now, the way we've chosen to address this from our aspect is by taking livestock out of the food chain as much as we possibly can, hence reducing greenhouse gas emissions and obviously contributing to the cause towards animal cruelty. Now, I don't know whether how many of you attending this seminar know, but livestock is predominantly responsible for majority of the greenhouse gas emissions that are emitted. Beyond that, the livestock itself and the deforestation that it creates because of the crop that needs to be grown to feed the livestock. So by looking at alternative means of food, whether it's plant proteins or it's plant dairy or it's much talked about cell-based meat, we are trying to do our bit in reducing that impact. The second large agenda that we are absolutely 100% committed in driving is gender equality and equal employment opportunity. I think we all know how many women ventures are getting funded, what percentage of women entrepreneurs are getting the opportunity to come and shine. In the last 5 years or so, we've looked at the major divestitures that's happened in the world in each sector and how many of them have been dominated by women. I think we are trying to change that matrix in our own small way. Now, we don't claim that we are going to change the world, but we are a fund that's taking a very, very strong approach and strong position, backing based ventures and trying to push through women stakeholders in ventures, especially with plant proteins and plant dairy. The third aspect, which is much to do with food security and sustainable food that we're looking at, which is also a massive mandate by the United Nations in terms of SDG and a lot of these ESG investments, is looking at the supply chain from the food food that the farmer grows in terms of fair trade and ethical sourcing, to the food production and processing and the processes that go into some of the production and processing, from looking at LEED accreditation, carbon offsets, carbon credits, decompostable packaging, and some of those more sustainable methodology production, as well as logistics and distribution. Now, in the pandemic, we've seen the importance of hyperlocal. Now, gone are the days where you've got a global supply chain producing in a low-cost economy and then kind of, exporting all over the world. Yes, it creates enormous amount of carbon. And the whole point of being a very sustainable-led initiative and, and achieving some of those development goals is to be, carbon neutral. So the way we are doing it is obviously we are looking at the whole distribution, logistics, supply chain, and trying to look at it from an ethical as well as a sustainable lens. Now, these are the 3 areas that at least we are driving. There are 17 SDGs and many ESGs. And I mean, you've got to do your own bit. But beyond that, I think what's really helping us now, COVID-19 has been an incredible distress that gave way to incredible opportunity. Now, as a first-time fund manager, that's trying to build a fairly large fund for the first time, I think one has to understand that not being able to travel and meet people, recruit some of the LPs, recruit some of the ventures, have posed a huge hurdle and barrier to a lot of people doing their job. So we are really embarking on technology on multiple fronts. You've got the cloud-based technology where transfer of documentation and exchange of information is happening on an encrypted level, because obviously when you're speaking with ventures, you're speaking with limited partners, you're dealing with financial information, it's kind of sensitive in nature. So cloud-based platforms that are highly encrypted has really helped us carry that process out, and as a result kind of achieve what we set out to achieve. In terms of business analytics, I mean, I think artificial intelligence mixed with business analysis has given way to business intelligence. Now, when you're trying to kind of identify growth patterns, whether it's on a market level, an economy level, a city level, and a competition level, being very well aware of the surrounding that you're trying to compete and build your ventures in is very important. We've kind of used multiple platforms that doesn't even give us macro data, but also you can customize the kind of research and the kind of intelligence that you hope to get. Now, that's obviously the first level intelligence, but there are many layers to intelligence one has to understand, some of which is obviously depending on your grapevine, your own professional and social networks, and of course, the surrounding that you're aware of. But some of these business intelligence platforms has been absolutely key for us to, for our deal flow to start with, for our venture recruitment, and top level opportunity on what the market trends are saying, and merging all of that to give us a consolidated information on how we can then use it and kind of go down to the next step. Forensics. Now, I mean, anybody who's into the venture capital industry and in the business of investing, I mean, you would all be very well aware of the importance of due diligence. Now, previously, we've used a bunch of forensics and due diligence experts from the big 5 accounting firms right down to independent people providing that. Today, you've got online platforms which kind of do some preliminary checks on forensics, on companies that you want to kind of understand, whether it's to the company's office or any legal cases against them or any litigations against them, to give you a first round of kind of advice on who you're dealing with, and then you kind of drill that down deeper using your other networks. So that's been of great importance when building our venture using technology to start with. And of course, let's not underestimate the power of digital meetings, very similar to what we are doing right now. I mean, this has been the modus operandi for the last 12 to 14 months, at least in our case, where we've been talking to ventures in over 11 countries all around the world and carrying out multiple level of discussions. We've been speaking to limited partners, whether they're family offices, both single and multi, or they're sovereign wealth funds in many countries, and articulating some of the plans that we have and how trying to drive our impact, keeping SDG and ESG at the center of it. So that's a bit about what I do, how we view impact, some of the technology trends shaping impact, some of the areas that are lucrative family offices right now, areas like I spoke about education, climate change, healthcare, you've got automation, you've got, alternative food as a sector that I'm currently a part of, and of course, gender equality. And, it really helps getting and measuring some of these elements from an SDG and an ESG lens. Now, these are where the opportunities were. Now, obviously, opportunities come with their own challenges and barriers. In my opinion, and this is a personal opinion, what I'm kind of finding are two-pronged barriers. Number one, when you talk about impact investing, especially SDG and ESG on the forefront of it, a lot of people who are driving some of these initiatives are quite passionate about the change they want to bring about. And there's a very fine line between passion and, feasibility from a business perspective and business economics. Now, from an investor's perspective, ESG is great It makes all the noise, but not trumps maximization of shareholders' wealth. And that's at the center of it. Everybody invests money to make money. If you're not going to do that, you might as well do charity or run a social enterprise. But even that needs profitability for sustenance. So, I mean, the fact of the matter is, we find it quite challenging sometimes for dealing with ventures to balance SDG and ESG at the heart of passion and core, as well as balance the investor return expectation. So that's one of the challenges I find. The second challenge that I spoke a little while about is women-led ventures. We don't find enough of them, and I believe that it should be a huge focus for a lot of us to promote women-based ventures and really push them in the market. And number three, the biggest challenge I find is still a very, and that challenge, to put it in context, has got to do with the region that you're working with. If you're looking at emerging market spaces, so the likes of India, the likes of Vietnam, Malaysia, Indonesia, Cambodia, and some of these rapidly emerging markets, I think the family offices and the investors are still quite primitive in the way they look at things. Obviously, profit maximization takes the center stage, and rightfully so, based on the environment they function in. And I think in a lot of ways, ESG, SDGs, and some of the impact areas that you want to build is kind of left about. Now, the situation is very, very different when you look at the West. I mean, you go to European Union, Australia, New Zealand, or even in the United States or the United Kingdom, where you've got a more pragmatic view on impact that helps you achieve both SDGs and ESGs. And so it's kind of a mixed bag. But I do feel that no matter which part of the world you go, when you talk about independent high net worth investors, as well as family offices, I think there is still quite a big kind of focus on profit maximization. And sometimes ESG, doesn't take that kind of importance threshold that it needs to kind of take. I'm by no means saying that, you drive all your decisions purely by looking at ESG and SDGs. The business has got to be sustainable as well, and it's got to make profit, and the profit's got to be reinvested in growth. All that is absolutely forgiven. But I think, still the long way of shifting investor mindset, more towards a very sustainable method. It's happening. It's an amazing kind of growth in the pandemic that we've seen in that change, but there's a lot of changes that are yet to come. So that's a bit about, how we see opportunities and challenges in the impact investing space with SDG and ESG at the center stage of impact investing, and some of the areas that we are trying to do our bit to impact. Thank you. I would love to take questions.
We will find out, Amit, any questions anyone has. I think we will take it up in the panel, I guess. Amit, fine. Well, thank you, Amit.
Super.
It was a great insight you had given for all the three: SDG, impact, including tech and ESG. Greatly appreciated. Thank you.
Yeah.
So we end the session. We go for the next panel. Thank you.